Check out this short trade. It was triggered automatically as soon as all the conditions set by the client were met. The setup used 3 indicators: a stochastic, a colored histogram, and this one that plots horizontal green resistance lines. First, both lines of the stochastic had to be above the 65 level, and there also had to be a crossover, with the red line dropping below the blue one. Then, the histogram needed to be green at that same moment. And finally, the previous candle had to touch one of those resistance lines with its wick, without closing above it. The stop loss was set at 100 points, and the take profit was placed twice as far to keep a 1-to-2 risk-reward ratio. Once the price dropped 50 points from the entry, the trailing stop kicked in. It's a feature that moves the stop loss to follow price action and lock in profits. In this case, it kept a fixed 100-point distance behind the price. After the drop, price pulled back and hit the stop loss, but since it had already moved thanks to the trailing, the trade still closed with profit. Let me show you how we set this up through the inputs. We limited the number of trades open at the same time to 2, just to avoid overtrading. The stochastic used the same time frame as the chart, though it can be changed if needed. Each trade risked 1% of the account, aiming for double that as a target. The trailing stop was set to activate after a 50-point move and then follow the price at a 100-point distance. And if the trailing never activates, the fixed stop loss still stays at 100 points. If you use your own indicators and want to automate your strategy, drop the word automate in the comments.